Hi there, Marriott Martinez here, and in this video, we're going to use the example of using QuickBooks Ledger to catch up on a business owner that's bringing you books for the year. They just have a few transactions that happened here in year 2025 will be our example, and so we're going to go ahead and bring in their data so we can review their balance sheet, their profit and loss, and start preparing their books to get ready for tax time. So let's see what that looks like. The first thing we want to do when we're using QuickBooks Ledger is we want to make sure we have a fresh start. So if I open up my balance sheet for this particular client, the last time I was working on this client was back in 2024. To prove that, I will see some data here in 2025, which is really just the beginning balance from what we ended with this bank account back in December of 2024, and a few ongoing transactions because the balance sheet is an ongoing financial statement. So it continues on in the business and never ends until the business closes. However, if we look at the profit and loss statement, the profit and loss statement does start over every single year. So to prove that we have done nothing in 2025 yet, we open up the profit and loss and it's zero. Now, if we go ahead and change this to 2024, then we should see data from 2024. So let's go ahead and do that really quickly. So when we updated this information to 2024, we see the income in 2024, the expenses, and again, we see this net income that's in here from 2024 because the last time we were working on this client was to get this client's books closed for tax year 2024 and to prepare them for tax time. The last thing we want to check is that if the income ended in 2024 at $19,963.85, if we go ahead and pull up the balance sheet for 2024, we should see that exact number because the information transfers from the P&L, also known as the income statement, to the balance sheet. So let's this time open the balance sheet, and this time let's open it up for 2024. So we're going to update the date for 2024. And what we're going to see here is only 2024 data. And we're going to see that $19,963.85. We're going to see that amount in net income on December 31st, 2024. But when we go ahead and change this back to as of last year, which is January 1st, 2025, we can either select it in the drop down or type it in. We're going to, again, see the numbers we're starting with on January 1st, 2025, but there's no longer going to be the net income because this net income moved in to retained earnings. Now that we know we have a good starting point here for our 2025 tax year, we're going to go ahead and bring transactions into this account. We now have the data in QuickBooks Ledger. And we'll drop the other two videos in our QuickBooks Ledger playlist that show you how to either upload the data into QuickBooks Ledger or link your account so that way it can automatically come into QuickBooks Ledger. In this case, we have data coming in from a Chase Business Operations account and from a Chase Visa credit card account, which is a new business credit card account that this business has. So we have 13 transactions coming in for the operations account and 15 transactions coming in for the credit card account. And we're about to start categorizing these transactions so that way they can populate into the general ledger and eventually populate into the profit and loss. Again, no information is on the profit and loss here yet because the transactions are waiting to be categorized correctly so that way they can post onto the financial statements. So a few things to note. When you're about to start categorizing inside of any accounting software, and you know that there are possibly transactions that are related to each other, you'll want to go ahead and take a look at them in chronological order. So for example, I'm going to change this to be in chronological order. So show me all the transactions for the credit card from November and December of last year, which is when they received the first transactions from this card, because this is a brand new card. And I'm going to go ahead and also make sure that all of the transactions for the bank account are coming in also from December 1st to the end of the year. The reason why I want to do that is because possibly there are some payments that were made to the credit card from the operations account. So if I come here and look at this, I see that there is a transaction that was paid of $1,000 that was paid to the credit card. I see another transaction again here of $500 that was paid to the credit card. And depending on your accounting solution, if you have an accounting solution that tries to find that transaction, it's going to possibly pair and say, this $500 that was paid to the credit card is the same $500 that was paid out of the checking account. So this is what's called smart learning. So this accounting technology is using its AI to identify a transaction that is essentially the same transaction, so that way it does not duplicate that transaction. So what I'm going to do now is I'm going to use my financial literacy, knowing what type of categorizations I should be posting to, and being able to use the drop down to, again, post to the correct accounts. These are going to be your chart of accounts. I'm going to go ahead and categorize these transactions so we can go ahead and see them on the financial statements. Let me go ahead and quickly do that now. Okay, we have completed the categorization of all of the bank account transactions. That's why we show all caught up in the bank account. And we also have all of the credit card transactions categorized as well. Now, what's really important when it comes to categorization, this is both for the accounting professional and the business owner categorizing, is that just because you've categorized transaction doesn't mean they're always going to look great on the financial statements. But that's okay, because you've already done more than half of the work to get the transactions into the financial statements. And now we want to just look at them and then possibly go ahead and reclassify them if necessary. Let's start with our balance sheet. On our balance sheet, as of the end of the year, December 31st, 2025, we see the bank account, and the way we can go ahead and verify that at the end of the year is to do a reconciliation. We see that there's some petty cash that came in. We also see that there was some office equipment that was purchased. We also see that the Visa new card that was opened has a balance, and again, we can validate that through the reconciliation as of the date of the statement. We also see some transactions that happen through the equity account, and it looks like now we have some net income. So what is this net income? Well, we need to look at the profit and loss, also known as the income statement, to go ahead and double check that. So let's open the profit and loss statement. Here it is as of 2025. So first, we're noticing some strange things happening here on the top of the income statement. So we have this amount that's a negative $71 going into other income. So this is when we're going to start identifying some areas that we need to take note of and then go back and look at it. But what we're doing right now is what's called the first review. So we know transactions have been categorized. We know there's nothing left in the transactions because we verified that. And we're just doing the first review of the financial statements. We'll take note of what may need additional review, and then we'll go ahead and do that. So again, here in the profit and loss, we see that $71, a negative amount in the income area of the P&L. That looks a bit strange. We also have an income and a sales account. This is probably the same sales account, so we can probably merge these so we don't have two separate accounts, as long as we're not trying to see different income streams. Possibly this is income from two different income streams or income types. And if that's the case, there should be more detail where it says income and sales. We also have our expenses coming down that have been separated and categorized by expense type. We also have some accounts that have no account number, and we just have some random accounts that have account numbers. We can turn off those account numbers if we don't want to have account numbers at all on the financial statements. And then we can just see the categorization and the names. We also have some transactions coming in to Ask My Bookkeeper, so we'll want to go ahead and see what that's about. This is possibly the business owner posting to the Ask My Bookkeeper account, which is usually an account that has the suspense items or other items that they weren't sure how to categorize it, so they put it in an Ask My Bookkeeper account. There's also a few more transactions here, and that takes us to the net income of $19,663.18. Again, we know that that should match the balance sheet net income amount of $19,663.18. because as long as we're pulling up the financial statements on the same date and using the same accounting method, in this case, we're looking at an accrual balance sheet. In the profit and loss, we're looking at an accrual profit and loss. We should always have the net income tied to the balance sheet amount. So far, we know that it ties. Now we're going to want to do some cleanup. We'll do that cleanup because that's the next part of getting the books ready for taxes. And we'll do that in addition to looking at a few more areas inside of QuickBooks Ledger in the next video. See you there.